Hello, everyone. Oh, I realize you're muted. Oh, sorry about that. Yeah, so I'm not very new on this platform to most of you. I think I've done a number of webinars in banking over the past few years. I would like to start by welcoming everyone to this session where we are going to discuss the South African experience. We wanted to start at exactly 1:30, but we realized a lot of people were still joining. So we ate into about 7 of our minutes. I've got our panelists here. So I'm going to start by introducing the panelists and then I'll introduce myself. We have got Michael Walker. Michael Walker is a partner at Ernst & Young. He heads up the quantitative advisory services, and he's quite a lot of experience in risk management, both banking and insurance. And he has been involved in a lot of things like credit risk modeling, IFRS 9. He also does apply data analytics. He's a data science person, and as well as machine learning. That's what he applies in his work. Thanks. Welcome, Matthew. You introduce yourself fully later. Then we have got Nea Zhang Li. She works for Deloitte. She's a manager at Deloitte. She has got experience in both banking and insurance. She's also a recent qualifier. So for some of us, the audience here, who would like to know the experience for someone who qualified and has been working in banking for a number of years, Nea will address some of that. In fact, the experience that we have of the panelists of having both insurance and banking experience also illustrates the expertise that we have in other areas that we can use within the banking space. So Nea, thank you. Welcome.
Thank you.
And then do we have is Simon here? I haven't seen Simon. We've got Simon Greenback. Yes, Simon Greenback has been working within the banking system. So the first two panelists, Matthew and Nea, work in the consulting space. Simon has been working within the banking space, starting with FNB, First National Bank in South Africa, one of the big 4 banks, part of the First Rand Group. And then I also worked with Simon at Nedbank when I was at Nedbank, and he was in the model validation unit. And now he has moved to, has been working for ASSA for a number of years now, probably more than 5 years, I think. At ASSA, which is also one of the big banks in South Africa, one of the big 4 banks, formerly known as Barclays Africa. So welcome, Simon, with your wealth of experience. Okay, now, okay, thanks. So I would like to go to the questions. We've got 6 questions that we prepared. I'll just go to the questions, and we will be asking our panelists to give themselves their experiences so that you can understand. As for me, I've been working in banking banking space for close to 13 or 14 years now. And I moved across into banking, having started as a pensions actuary. I qualified as a pensions actuary, and then went on to do a lot of investments and pensions combined before I moved into banking. So I've been practicing banking for those number of years. And currently I do a lot of work, especially on the credit risk advisory space, including IFRS 9 implementation. I've been advising a few banks on IFRS 9. I'm also an investment banker, so I do a lot of transaction structuring as well as managing risks, and as well as where there is project finance, we do ongoing risk implementation and monitoring risk management work in that space. So I've covered a lot of stuff in the banking. I've also been involved in developing the banking subject for actuaries in South Africa, which is, I think, the same subject content material. The Institute and Faculty of Actuaries is also looking into that. So they will probably be interested in that. So I've been involved in banking for a very long time, as well as in banking education. Now, in terms of our questions, the first question, straight question, how did you guys move into banking, and what was your experience in moving? So I'm going to start with Neha. So Neha, I'm going to start with you, so that you just tell us how you moved into banking and what your experience has been.
Sure. Hi, everyone. So I moved into banking around 3.5 years ago. It was not a planned move. I was just looking for something new, something challenging. And at that time, Deloitte was hiring. I remember getting a job description, reading through it, and not really knowing what it was, but I still decided to go ahead and give it a go, just to do something challenging for myself and to learn something new. Actually, Matt, who's on the call here at that time, was the one who hired me. Yeah, so that's essentially how I moved into banking. So it was not planned, but I've been enjoying it since day one. Lots of things to learn, lots of challenges, and a lot of smart people that you work with.
Oh, thank you very much. Yeah, that's interesting to hear. If I would ask Simon, you probably have been working in banking for much longer than some of us. How did you move in banking, and how has your experience been?
Everyone. I started off doing pensions work and general insurance work. Then I was lucky enough to be able to take a break to do my master's, and then when I came back from the break, I felt that I wanted to try and work in more non-traditional actuarial field, and there was an opportunity to move into banking. First into the sort of almost a pure analytics space within First National Bank, as Michael's mentioned, to deal with pricing and revenue enhancement, and then into more sort of structured model risk management and regulatory model management space, where I've been involved in for probably about 12 years now. I think as far as banking is concerned, I qualified while I was at the bank, so that was quite helpful, and I found it challenging in some ways. I think it requires an actuary to work with a much broader sort of range of stakeholders than in a more traditional field. And I suppose it requires an actuary to prove his or her usefulness every day of the year, because certainly in South Africa, when I started, the banking guys really we're not familiar with actuaries being involved within the banking space.
Okay, no, thank you, Simon. That's quite interesting. This story of having to prove because the people are not used to working with actuaries. That's something you would always find. I mean, I actually stopped using the title actuary. And Matthew, what was your experience? How did you move into banking, and what was your experience?
Yeah, so Michael, I guess for me it was a little bit different because I started out in banking right after university. My first job was in banking in one of the banks, and I guess I initially started in the home loans area, so with a credit risk focus, an area probably where the majority of actuarial students and actuaries are working within the banking arena. But then I also got quite a bit of experience working in other parts of the bank, some specialist project work, ultimately, I guess, just being, in the analytics domain, and you're also working within investment products. So I guess from a risk perspective, dealing primarily with liquidity risk, and also having a wide range of analytics experience.
Okay, no, thanks. Yeah, that's quite good. At least you started a bit early. Which year did you start again?
I started at a bank back in 2006. So yeah, for me, it's been about 15 years in banking.
Okay, 2006. So that's quite a long period. Yeah, with a lot of experience behind it. Yeah, that's quite interesting. So I was asking the question. So the question I was asking is, with the experiences, how you joined, and your motivations and the experiences you have had. I want to go straight to the challenges. The challenges that you have faced or that you see, and how you have addressed them, and how you suggest you address them. And I was going to ask you, Matt, to start with you, just to discuss with us the challenges you have faced and how you have addressed them.
So I think the first challenge, I think, is something that Simon picks up on. I think is, as an actuary in a bank, as opposed to being an insurance company, you do need to prove yourself. And I think, actuaries as a profession, I think certainly, 10, 15 years ago, weren't very common in the banking space. So it was something that you had to, I think it was a challenge initially to try and sort of make a name for yourself and sort of demonstrate why, why perhaps you needed an actuary at all. I think the downside potentially for a firm hiring an actuary would be like the study leave, the study policies, which typically are very generous to the students. And then for a company to actually take on that extra cost, I think there's definitely a justification that has to be made for the value that they can bring. So I think just getting over some of those basic hurdles, I think would have been the challenges initially. And so I think in South Africa now, there's quite a lot of actuaries working in banking. So as an industry, I would say some of those broader challenges have perhaps been removed, but it depends on where you're working in banking. Certainly investment banks don't perhaps prioritize the hiring of actuaries as much as retail banks do. So it does depend exactly where you are in banking. I think the experience can definitely differ, but it's I think for me personally, I think it was just really about trying to convince the right stakeholders of the value that I could bring. And I think I think now I would say, from my perspective, I'd say in South Africa, we've overcome a lot of those hurdles.
Yeah, no, thanks for that. I think all the people in the audience, as you navigate this area, I think this is what you're always going to find, because your actuaries, you used to study leave, you used to a whole lot of things, and banks may not have the same format. I think it's something that has always been raised. So thank you very much, Matt, on that. And then Simon, on your side, beyond trying what you've already addressed, beyond trying to be understood, what else?
So look, I think I'll second Matthew on that. I think study leave is a big component of difficult potential we face. I've been lucky to be at two large banks which do support. That's First National and outside in ASSA. The others, as far as I know, do not have a formal study support policy for actuaries. But normally we can arrange study leave and study support at the discretion of the manager. I think the difficulty that we've faced in the past, and possibly less so going forward, is that the managers traditionally within the banks came from either the accounting profession or from the quantitative background. So the extent to what actuaries require, or your students require study support, was not really something familiar to them. And I think a lot of the sort of aspiring actuarial students that were forced to either move back into the traditional field or in fact, or indeed forgo writing their exams to be able to perform appropriately.
Okay, no, thanks. So same issue coming through there as well.
Yeah.
And Neha, your experience at Deloitte?
Unfortunately, Deloitte didn't really have an issue with study leave and study support, so I was fortunate with that. But I guess one key challenge is that your line of work is probably not, you can't really apply it in your exams as such, because especially the specialist exams is usually life or general or investments. And now you're working in the banking industry, so you can't really use what you do day to day in your exams, essentially, as part of your studying, if that makes sense. So I think that's a key challenge that maybe students will have, as opposed to you working in the life industry and writing your life paper.
Okay, so yeah, so I think so those are the issues you faced, and if I just add on there, thanking you guys for sharing that. If I just add in there, normally, I mean, organizations always have a training and development plan. So if you find that there isn't anything specific for this particular profession, you probably need to have a look at that and see what it allows, what it doesn't allow, and negotiate your way and see if you can't use what's already in place. So that's quite important. And yeah, so in terms of line of work, Nea, you're spot on, and that's the reason we introduced the banking subject in South Africa in 2015, and the reason we think the world should actually go the same way, so that actuaries are also properly trained in banking, despite the fact that our qualification already gives you all the basics you need, to do that. You need to understand the bank and how it works and how it operates, and then you're able to address some of these issues. I mean, I mean, that's what I did, just to understand how a bank operates. And then I started understanding even my work much better. But now we've got a subject, and I hope that as we move, that will help a lot of us. Now, so following on, we spoke of the word challenges. Now I want to turn around that word. Now we want to talk about the banks themselves and the banking work itself. The issues that you see, I can present them as challenges, or I can present them as opportunities, where you find gaps that you believe actuaries can actually address within the banking system. Now, that goes right deep into the work that we're doing as actuaries in the banking space. So I would like to start with Simon, and then from Simon I'll move to Nea, and then I finish with Matthew on that particular question. The challenges that you find in the banks, or the gaps that you actually see, where actuaries are useful in solving problems. And that's at the heart of what we'd like to hear.
Yeah. Look, I think, so, I mean, I'm a firm believer that an actuary could work anywhere within the banking system. We've got sufficient basic knowledge, education, and I suppose our training extends far beyond our sort of other professionals within the financial systems. I think sort of for me, a natural fit has always been within the risk space. I think why I think progressively now where we find ourselves, obviously, well, not obviously, but the banks are becoming progressively more digital. They are using more and more advanced technologies and techniques as far as modeling is concerned, and then using that modeling not just to for kind of very narrow scope of application, but across the board. And I think that digitalization will impact the risk space in particular. What we've seen in the past, and personally what I've seen in the past, is that the quantitative professionals have not really been successful and I'm not talking about actuaries, I'm talking about kind of pure quants with a master's or a PhD in stats, have not been successful as far as being appointed to senior roles within the bank. So even those that have kind of achieved a senior position, that was very much expertise specific, as opposed to sort of a general management. I think that is because their training is really not focused on a broader aspects, professional communications, understanding of macroeconomic context and implications for example, implications of model within the bank. So I think that's where actuaries are fundamentally different from pure quants, in that through our training, we have a much broader big picture view of things, I suppose. We can do the technical stuff, but we can also elevate ourselves to the next level. Yeah, I think for someone who failed communication 6 times, I do think that communications is a critical aspect, and I think certainly as actuaries we are trained much better in that through our professional exams than for example just purely technical degrees at the university. And I think that gap can be filled by actuaries quite well. Sort of the gap between just pure technical work versus kind of elevating it to the next level, making sure it becomes important and understood at the executive level of the bank.
Okay, no, thank you very much, Simon, on that. That's excellent input. I mean, that's what some of us have been seeing as well. So if I go to you, Neha, so the challenges that you see within the banks themselves, or the gaps that you see where actuaries can actually fill in the gaps, or you can even call them the opportunities that are there that actually then allow us to deploy our expertise as actuaries.
I guess similar to what Simon says, I think in the risk management space, actuaries can play a key role, especially in South Africa, where the banking industry is constantly evolving and innovating, because now you have digital banks, behavioral banks. So products are becoming more and more complicated. So with the complexity comes a heightened risk. So obviously actuaries are trained, everyone has at some point in their lives memorized the actuarial control cycle. So it gives us a framework to address, to identify, assess, manage any kind of risk that there is in the banking space. And also lately, there are emerging risks. So one hot topic that in Europe, in the UK is, for example, climate risk. So that's a field where actuaries can also add value. So that's not specific to the banking industry, but any other industry, but any kind of emerging risk, similar to now we see COVID-19. And how to assess, manage, and measure the risk, and just redefine the risk management strategy of a bank to ensure that the company is resilient going forward as well to any kind of risk. So yeah, I think in the risk management space actually can play a very important and key role in the banking industry.
Okay, thanks, Neha. That's so we are risk managers by training anyway. So yeah, that's definitely true. Eh? And Matthew, being a partner at Ernst & Young, what do you see?
Yes, so I think definitely the risk management is part of it, but I almost just clarify that a bit more by sort of saying I think there's specific risk areas that are very significant in banks, differs to insurance companies, and all of those areas are areas where actuarial skills could be applied. The biggest one being credit risk, but then the second one being the market risk area, and then I guess liquidity risk is a third. So those are the I guess the traditional risk areas that banks face. Operational risk is another area, but I think the amount of work in operational risk is relatively limited. So you've got all that risk management side, but then you've got maybe I guess more of the customer side. So that becomes more I guess typical analytics work, or perhaps now nowadays more commonly referred to as data science work, but definitely another area, like another very large area where anyone with an actuarial background, could play a role. And I'd argue actually there's probably more opportunity on that side, given the growth in technology and the focus of digitization in banks. So in terms of opportunities for people with a natural skill set, I think, especially if you can marry your actuarial skills with a strong technology background, I think a great deal of opportunity relating to customer and all of the analytics and data science work relating to that.
Okay, no, thank you very much, Matthew, on that. I mean, so I think, so we can actually see that there are issues, there are gaps, or there are opportunities that actuaries can fill in. The starting point being we are trained risk managers. If I summarize what you have shared with us, we are risk managers and we can come in and add value. And there's a point also raised by Nair of emerging risks, where we could come in, no one has seen those before. So we could come in and we are at par with everyone that we found in the banking space. Then Simon, you mentioned the point of, quants, they do rise, yes, a bit, but we come in as a profession, we come in with some bit of professional application. We've got a profession backing us, and we have got our own, guide in terms of minimum standards that's expected of us. All of those things tend to be gaps that you can actually find within the space. A lot of people ask this question, and this question was asked, I think it was asked pre this session, that so what is it we as actuaries, what is it that we would bring, that the other quants are already doing in this space? And what you have just discussed here, answers that question to say, look, we are a profession, we are risk managers. We just never realized that the skills we have are applicable. We have moved in now, we are addressing our education needs and the need to communicate that Simon, you mentioned that, some of the skills we have, which will be actually the next question, which will be a short one on skills. The skills you have as a profession and how we train ourselves can actually help us fill in any gaps that we find in there. So that's quite an important point. So thank you very much for answering that. It's a whole range. We can't cover everything now, but it's a whole range of areas where you can work in a bank. Some of you who may be interested, you can go on the IAA. It was Banking Working Group. I think it has been changed. The name might have been changed. There is a work page there. There's a lot of reports and information where we have put there that talks of the areas where you can work in banking. That talks of some of the gaps. So there is that stuff. So thank you. So I want to move to an important question on, so what skills do you guys have? I mean, what skills you actuaries who are working in banking, what skills do you believe are important? This is a short question, but what skills do you believe? And I'm going to lead this by, someone always used to share this, it's a UK actuary used to share this saying, in the UK, it has happened before that there was just a quick survey by HR managers and they went in, asked HR managers and say, would you hire an actuary? And the answer was an overwhelmingly no. So that was in banking, they went to banking HR managers. The answer was overwhelmingly no, we wouldn't hire an actuary. And then the same question was changed. So they had to list skills that actuaries possess and say, right, would you hire someone with these type of skills? And the answer was yes. I think it was 92% or 94%. I think it was in the Actuary magazine or something like that. So that was in the banking space. So how you position yourself, in the skills we have can have an impact. So I'm asking you guys the skills you believe that you want to share with the guys here as a way of your training that have helped you or that you believe we must have to be effective in the banking space. So now I'll start with you on this one.
I guess the first one, like we've all mentioned before, risk management skills. Second one being mathematical and statistical skills. we obviously get trained a lot throughout our university career and through our board exams in terms of any kind of mathematical models. And now also recently, I think the UK Institute and the South African as well included coding in the exam. So coding skills can now be added to the list of skills. I think another key skills is probably being able to look at things from a holistic point of view. So have a broader perspective on things. Yeah, I guess another one would be critical thinking and maybe something simple like hard work, because we all know how long it takes to clear all those exams and how much sacrifice everyone had to make at one point or another to be able to qualify it. So I guess all those comes like packaged into one actuary essentially.
Okay, so thank you very much. And do you believe whilst still at UNER, do you believe our education is good, covers all the stuff that we need to be able to, the issues you have mentioned?
Yeah, I definitely think that we do get a broad kind of exposure through our training, and that we can use not only in the banking industry, but in any kind of industry. It doesn't have to be limited to insurance or banking. It could be in any kind of industry. So I do think we are well equipped.
Okay, no, thank you very much. Yeah. So, and Matthew, you've got a whole division there. When you are recruiting, what are you looking for? What are these skills that actuaries have or must have?
Yes, so I think, I guess, and wanting to contrast it naturally when you're talking about banking is, what's the difference between an actuary and a quant? And what skills does an actuary possess in addition to a quant? Because a lot of the maths and even perhaps understanding risk management to some extent, statistics and modeling and even computer programming are things that quants do as well. And I'd say the differentiator for the actuaries is the communication and the professionalism, which is, and also actually the third one is probably the CPD. And so that link to a professional organization that I guess maybe holds you to a higher standard of accountability and also insists, that you do further training, that you keep up to date with, the latest developments. I think that's one aspect. And then, so professionalism, just generally working with actuarial, people in the industry, as well as in, I guess through my experience with recruiting, actuarial guys generally come across as more professional, and obviously the qualification and the training supports that. And then communications, which is fundamental to everything that we do. In myself working in consulting for the majority of my career, everything that you do comes down to a report that you write to the clients. And so regardless of how good your models are, I think that the written and the verbal communication of how you present things is really important. And, other professions don't teach that explicitly, obviously, some professions do, but just doing a university qualification to become a quant doesn't teach you that level of communication. And I find that those elements are very important. But on the quant side, equivalent to banking, more and more focus on the coding and the development of data science. So I think all of those coding skills and computer skills are becoming more and more important, and actuaries definitely have to stay up to date with that to stay relevant. But with those other aspects overlaid, an actuarial student or qualified actuary could definitely stand apart from your average quant.
Okay, no, thank you very much for outlining those. I mean, actuaries would be familiar with what we teach in our courses, and we don't just teach them to be applied to your traditional areas. You can apply them across the board. So thank you very much for sharing that, Matthew. And Simon, from your side, from your perspective, you've already touched on some of the skills earlier. And what else would you add on this?
Yeah, just broadly. I mean, I think kind of we must remember that the bulk of the degrees or degree people that are seeking out of university, it's largely theoretical knowledge that they possess. There is some of the programs that have a practical kind of slant to them. But I do think that through actuarial training, you get not just kind of a breadth of different techniques that you get exposed to, like financial mathematics, statistics, time series, mortality investigations, all of those things, macroeconomics or economic theory. But also you get a fairly good exposure to the application of those techniques, and that's how the exams are based, right? They're not purely theoretical; they're based on actual cases. But then in the second part, once you start to specialize, the focus turns away from the actuarial, from the technical work to more kind of high level understanding. Understanding of the importance of risk management, understanding of the importance of regulatory requirements, exposure to project management, exposure to processes and controls. So all of those aspects that we get to pick up as part of our kind of specialist papers that do come in very, very handy. And just, yeah, it's the, like Matt said, it's the professional aspect of it. That there's a profession, we have a much better kind of, it's not a standalone thing, it's a sort of a collective standard of behavior. That's kind of, yeah, I mean, I think that those are the skills that are exceptionally helpful.
Okay, thank you very much, Simon. So, I mean, if I have to summarize, I mean, you guys have touched on the technical skills that we already are trained, that we need to have, statistics, mathematics, even modeling. And then you have also touched on some of the non-technical and soft skills. And these are actually even more important because the technical ones, you can take them for granted, we already trained. And luckily our education system globally as actuaries does include a bit of normative skills or soft skills in the training, which is quite a good thing. And in fact, why I'm saying I'm a fan of this, only yesterday, I bought a license and a learning management system for soft skills, for professionals in general, from actuaries, just because I'm growing up and getting mature, probably wiser, and there are things I see, and I said, let me have this and maybe try to position that. And that's what you need in any environment, and that's quite critical in banking. And that includes understanding the business of a bank and understanding what you guys have said, the importance of risk management. All the issues, and then the soft issues, critical thinking skills that you're supposed to have, the communication skills that you're supposed to have, a whole lot of things that you need in a bank. So it's not different from the traditional areas, but if you show those more, maybe we can even show ourselves as much better than someone with a PhD and he just comes and he's just taught hard coding and that's it, So thanks for sharing that. So we have got we'll allow another 15 minutes of discussion before we move into looking at the questions. We probably have only another two or three questions that I wanted to pose to you. Now, we are entrenching ourselves into banking, and you can see that as we go into the future. So I'm talking about the future now. So you already know what we're doing now and the opportunities that are there now. Now going into the future, what do you think are the issues? Yes, you have touched on digitalization. I mean, the fourth industrial revolution is going to come with a lot of changes that will affect banks, digitalization being one of them, right? So what do you see are the challenges into the future and opportunities into the future within the banking space that we can take advantage of, that we can position ourselves? We're quite new in this area. We're working well with other professionals, but we are seeing, like Nair, you mentioned emerging risks, for example. So I just want to ask that question. It's a bit of a, tell us, tell us what might happen in the future that poses challenges and opportunities? That's my question. Do you want to go, Matthew, on that?
Sure, I can try. Yeah, so I guess I would say maybe like if you're going to talk big themes, I think things that affect actuaries are things that affect the organizations themselves. And I guess, so globalization being one, and digitization, and, for example, the ability for payment systems to, from the likes of, say, Google and Samsung and Apple to work across jurisdictions and to be cutting out some of the traditional players. I think that poses challenges for the banks around technology. And so that creates potential opportunities for actuaries as a profession, or just as individuals to understand what those what are those industries doing, and how should the banks be responding. Everything to do with big data, artificial intelligence, and understanding how banks need to incorporate that into their own thinking, into their own model development, working with the regulators around understanding the implications of machine learning on credit scoring, for example. There's many areas where big data and data science is going to start challenging the traditional models and the traditional way of thinking. And I think definitely creates a challenge for the banks and the people working in those areas. But it certainly also can create opportunity if you, an organization, that's leading the initiatives and being a market leader in terms of implementing digital solutions, integrating your platform so that you can create the best single view of a customer, so that you can market and do perhaps specialized or focused marketing to subsets of customers correctly. There's certainly many opportunities in that analytics space with improvements in technology for actuaries to play a role.
Thank you very much, Matthew. These are definitely big ticket items. I will summarize them at the end as you have outlined them. And if I come to you, Simon, what are the issues that you're seeing going into the future? Challenges, opportunities, and actuaries where they can play a role, where they can position themselves.
Yeah, look, I think I'm not sure if that's what we've seen globally, but certainly within South Africa, the bank's bottom lines are under pressure from a number of different reasons. I suppose the emergence of the shadow banking system or non-bank institutions that effectively facilitate bank-like services is potentially problematic, particularly if they do not have the same compliance requirements as traditional banks do. Likewise, the focus of the regulators on liquidity and capital adequacy is something that impacts the bank's bottom line, makes it, I suppose, more onerous to the business. Separately from that, the drive into kind of the machine learning world and the proliferation of data that not just banking but other entities use and have available will definitely require new model risk management techniques to emerge. And I think whereas automation, and look, I'll talk about models because that's close and dear to my heart. Where risk management, where automated model development can kind of be effected through IT professionals, specialists, but I think model risk management needs a very particular kind of skill set, which cannot just be technical. And I think the more the models are used and the more opaque and complex the models become, I think the more onus there will be on model risk management. to function properly, to evolve. And I think that's probably, in my mind, is a good opportunity for actuaries in general. I think we are going to be in a difficult environment for the foreseeable future because of those pressures on the bottom line of the banks. It'll be interesting to see to what extent the banks are able to invest into all these new technologies and how that evolves. I do think that the traditional actuarial skills kind of lend themselves to work within the risk space more so than necessarily business. But that's my opinion. That we've got actuaries, qualified actuaries that work in business at the moment within the bank that I'm employed at, and they do perfectly well. But yeah, I don't know if that kind of answers the question, at least partially.
Yes, no, thank you very much, Simon. Yeah, I've definitely taken note of this. I mean, I'll do a summary. I want to hear from Nair the same question. I hope you don't want me to repeat it, but you know, the future, in terms of the future, where we're going, because we are definitely not going backwards. We are entrenching ourselves in banking, and we are going to continue doing it. What is the future? What does it look like in terms of challenges and opportunities that you see where we can fit in?
I think Matthew and Simon has covered most of the points that, in terms of challenges. I also think that machine learning, you know, blockchain and AI obviously is somewhere that actuaries could get involved in, and we obviously need to upskill ourselves accordingly. Another area would be, I guess, competition. There's more and more banks with different type of product offering in the market. So banks will need to innovate, not necessarily in the traditional banking space, but maybe in more of like a reward program or things like that, where actuaries could also be involved in, from pricing and any kind of analytics to, you know, to retain market share, to attract customers, and to just be competitive in the market going forward. And lastly, as Simon and Matthew mentioned, the regulator. So engaging with the regulator, making sure that that everything is in place, that the risk management, the governance structure in place, right policies, right ERM framework in the bank. This is where actuaries could add value. It could be a challenge and an opportunity for actuaries in the future.
Oh, thank you very much, Neha. And I think, yeah, you've also outlined a number of issues. You know, the reason for that question, it's because, you know, we're not static. We want to see whether we remain relevant and whether we can actually see the opportunities. So the summary of what you have shared with us is, for example, you spoke about some big ticket items, such as what's happening with globalization and digitization. We spoke of it when I said the fourth industrial revolution. And what's happening with big data or data science, which is quite great because the actuarial profession has embraced this as part of our even education system. The issues with artificial intelligence, for example, machine learning and what it can do, where actuaries can literally come in and add value. And then things like new banking models, you know, that are emerging both in the retail banking space and in the commercial or corporate banking space, investment banking space. I mean, we can give so many examples that are happening around the world. But one big one in the commercial space that I can give you is the emergence of private debt. And I don't know if you have been watching this. Since 2008 financial crisis, when liquidity was an issue in the banking system, and you know, there were a whole lot of issues happening there. Private debt started to rise. A lot of money is being put there. That's the shadow banking you were talking about. Where, Simon, you said there's pressure. There's pressure on bank balance sheets and profits and loss because of some of these things that are happening. And then you spoke of the regulatory issues that are currently there, and I'm sure they're going to continue to change on the capital adequacy side as well as on the liquidity management side, which actually are some of the things we've been talking about that gave rise to even the increase of involvement of actuaries. And then you spoke of model risk management that requires specialized skills where we can effectively just take over that and say, we're going to be here. with our profession, and we will make sure we can implement. And now you finish by saying, with all these issues that have been spoken about and the new business models that are coming in the banking space and the competition that's happening, we need to be innovative, and we can come in there and probably add some bit of value. So that's actually excellent. And these are the issues we need to be talking about all the time, because those are the opportunities. That's what is making us remain in this space, what we're doing now and what will happen in the future. So thank you very much for asking that. So I'm going to go to my last two questions that I'm going to combine, and we're gonna take those for 5 minutes. I'm going to combine these. So the first question is to do with individual actuaries that are here. What advice do you give them if they are looking to move into banking, or they've just recently moved? So what advice would you give? That's for individual actuaries. The second question aligned to that is, in those jurisdictions where we are not already doing banking, what is your advice so that they can entrench themselves as a profession within this space? So the first question is on the individuals, what they can do. The second question is the whole profession within those jurisdictions where they are right now. So I'm going to start with you, Neha. Maybe you can give us your views on that.
Okay, sure. So I guess if you're just out of university or newly qualified, if it's something you're interested in, I would say to just give it a try and see. And I think one key thing, similar to what Simon mentioned earlier, is if you're in the banking industry, try to find a mentor, a manager that is also an actuary that can support you through your professional career and through your study and exam as well. Because obviously we work with a range of people. Not everyone is an actuary, so other people may not relate to your own experience. So I think it's a key thing to maybe seek a mentor who is an actuary within the banking space. And maybe the banking space is also quite wide. There are so many different departments. So maybe try, if you get into the banking industry, banking field, maybe try different departments and see what is best for you. So that would be my advice to someone who's fresh out of university or newly qualified and that want to go to the banking space.
Okay, thank you. And then the jurisdictions, the professions out there that are not yet really doing much in the banking space.
So I guess from a professional point of view, there's a lot of competition because a lot of people now, after high school probably want to go in the data science route because of obviously all the machine learning and AI noise around. So then for a profession to be relevant and to also attract the right students and the right talent, they also need to provide more opportunities to its students. And restricting someone in the insurance sector may be working against the profession. So whereas giving more opportunities to the students, so whether it's banking or insurance or AI space or any other space. So it will help the profession and different associations to still be relevant and to still attract the right talent. And also we've seen lately a lot of insurance companies open their own banks. So a lot of banks are opening the private insurance. So it helps to have people with both skill sets that can, understand the group as a whole. Yeah, so that would be my advice.
Okay, thank you very much. I'm sure everyone has heard that. At the individual level, find mentors, try different departments, as a profession, try and get the right skills into the profession, continue bringing those people. There's a lot of competition there from other professions. So thank you very much, Neha, for that. And Simon, so I'll go with you, Simon, and then I will finish with Matthew. Then we go to questions.
Yeah, thanks. Thanks, Michael. Look, I think I'm not going to repeat what Neha said. I think one thing to consider is when you can move into banking. I think if you come across as a fairly junior person, quite easy to get in. I'm sure the guys from our perspective, whether actuary or non-actuary, as a manager, you'd want that kind of resource and that kind of education in your team. I think then the consideration becomes, does the bank have a formal actuarial study support program? And is the manager in question that you're going to be working with comfortable to support you in that and understands the demands of actuarial education. If you sort of end up in a more traditional field and you pass quite a lot of exams and you get paid really well, sometimes it is difficult to move into the banking industry. And purely it's purely experience driven. For us to bring across a qualified actuary that's got absolutely no experience in what we do becomes quite challenging. And then the other thing is, I think what has been really useful, certainly from a study perspective, is the fact that you can call yourself, I'm not sure if it's across the world, but you can call yourself an actuary even if you haven't specialized. So once you finished, the associateship, I think that would be also a suitable qualification for many people within the banking environment. If they're not going into a traditional field, that is an option that they can take, I suppose, particularly in countries where there's no fellowship in banking. So the balancing of kind of the study demands against what you offer them and how much studying to do, that's something that needs to be, I suppose, considered carefully. Sort of what I wanted to mention.
Okay. No, thank you very much, Simon. Yeah. You still wanted to add something else? Okay. All right. No, thank you very much, Simon, for those contributions. I'm sure everyone is listening to that advice. And Matthew, I finish with you. I've got 4 questions here that have been asked, and maybe we'll take 1 or 2 from the floor. So Matthew.
So Michael, I'll definitely say for people that are interested, people, especially people that have delved into this webinar, and, thinking about trying to move into the banking profession, I would definitely say there's no harm in going for it. Again, thinking about it from the perspective of someone who recruits a lot of actuaries, I think what I find interesting is just to look at the experience someone has on their CV. I've hired people with experience primarily in life or in general insurance. And in a way, especially when you're a junior, you just got to think about all the different experiences that you can gain as different tools that you can put into your toolbox that can help in your career going forward, regardless of which profession you actually work in. There's some general skills of business that you can work and that you can learn in any of the fields. So those will always stand you in good stead. And if you're learning to become a computer programmer in SAS, which is quite prevalent in banking, it doesn't mean you can't learn how to code in Profit or in R. So I think some of those skills are supportive of each other. So developing some of the banking skills can actually help you then if you go back into an insurance world. So definitely some experience isn't directly translatable, but there is certainly some experience that is. And if you focus on gaining those particular skills, then you wouldn't have lost any time, by working in the banking industry. And just on the jurisdictions that haven't embraced, banking yet, I would say that, I guess there's 2 aspects. One, for the institutions themselves, I think they should approach the banks in their jurisdictions and try and motivate for getting actuarial study leave for students. I think that would be one key hurdle that would help encourage students to move into that banking as a profession if they could actually see that support. And the second aspect is to approach the regulators to try, and this is probably a more difficult one, but to think about creating roles that become I guess almost mandatory for actuaries, or at least recommended for actuaries to perform within banking. Obviously, in insurance, you have a lot of that type of work, statutory actuary roles, head of actuarial control functions, etc. And to have something similar in the banking world, I think would obviously support the profession quite a lot.
Okay, no, thank you very much, Matthew. I'm sure everyone was listening, and they heard that. Develop your skills, and you would not have lost anything. Give it a try. get in there, do what you have to do, and then professions press the regulator, speak to the regulator, do what you have to do. This is what I call, we have to manage both the supply side, where we are supplying the actuaries to the banking system, but we also have to manage the demand side, so create the demand, engage the banks, engage the regulator. So that's those are the inputs. So thank you very much on that. I would like to go to questions now. We have got 20 minutes. We finish at the next 20 minutes we finish. So I'm going to go to questions. We've got 5 questions that have been asked here. So we have got 2 questions from Louis Doiron. So the first question he asked was, so we'll try to be brief in the answers, because some of the questions I can see they've already been touched on. They've already been touched on in what we've already presented. So what was your main challenges to be accepted by others within the banking environment? Question 1. Challenges to be accepted. Simon, you touched on this earlier, that you had to prove. Then what additional education would you suggest to better prepare actuaries for the banking world? Let's tackle those 2 questions. Let's try to be brief so that we have enough time for any more questions. We can always come back to a question if, Nea, challenges to be accepted. Did you find that difficult? I mean, you're already in a multidisciplinary consulting firm. And then the education, any further education?
I honestly haven't had any challenges to be accepted by others where I work with my peers. There were a lot of actuarial students as well. So I guess maybe Matt or Simon would be able to touch on that. In terms of education, I would say maybe upskill yourself from a data science point of view, your coding, your machine learning, maybe do some online courses, some like Coursera or Udemy courses, just to upskill yourself because there's a lot of coding and a lot of modeling in the banking world. So this would be. Okay,
no, thank you. And the 2, those would be your contribution. Excellent. No, thank you. I think they are hearing the answers. And Matthew and Simon, what else would you want to add to this? Maybe start with Matthew quickly, and then Simon, if there is anything. So I think
on the education side, I think if you want to work in credit risk, then definitely learning SAS is something that practically one could definitely look into, because SAS is very prevalent in the banking world, especially in credit risk. And but I think what you need to learn, I think also depends on what your skills are and what your knowledge is to date. But I guess that's on the assumption that someone hasn't got a lot of coding experience working with SAS would be a practical thing to think about doing. And I think the first question's disappeared off the list.
So how did you prove yourself? Can you see the questions?
Yeah, no, I've got it back. It's on the answer. Sorry. Main challenges, I would say for me, I think, I guess it probably was a bit different like 15 years ago. But I would say that, having managers that were supportive, I didn't really feel like it was particularly difficult. For me, initially, I think it was just trying to explain to the managers that hadn't had any actuaries in the team before, understanding what it meant to take, like a month of study leave, like in a 6-month cycle. I think, some sort of operational challenges around familiarizing the guys with what you looked for as a student. I think that was, my main challenge when I was, still trying to study.
Okay. No, thank you very much on answering that, Matthew. And Simon, do you think you have anything else to add there?
Yeah, look, I think as the guys said, I think it's about the value that I can add as an actuary and explaining and showing the differential. And it's it's a personal thing. Very difficult to justify better performance because you've done actuarial exams. It also depends on who you are and how you work. Just in terms of education, look, I think when certainly I qualified, I didn't have basic banking knowledge, and when I crossed into banking, it was a very steep learning curve for me. I think in South Africa, having the banking paper helps massively. I do know that it's got really good content because I was involved in writing it. And yeah, and I think, you know, I mean, a lot of training happens on the job. I think if you've got a solid, you know, university degree, which is actuarial, and you've done some of the exams, so you're still writing exams, you know, from a technical knowledge perspective, you'll pick it up when you come across. So I wouldn't really focus excessively on specific applications, because depending on which area of banking you end up, there'll be different further development that you have to undertake.
Okay, no, thank you very much for that. So I think those questions, you know, have been answered, being accepted. That's normal in any environment, any new. We know when we're trying to introduce the banking subject ourselves as banking actuaries, we had so many questions and challenges with actuaries, our own colleagues who were practicing in other areas like life and pensions. They just couldn't see it making sense. So you always have that. So thank you for answering. In terms of education, I would like to also say the Actuarial Society of South Africa subject, international banking subject, is now live. You can now register to write this paper at an international level. So on the education side, there is that element now. If you go on the ASSA website, you might find it, Actuarial Society of South Africa. It's now open for registration. So that might aid you. Otherwise, the only thing I'll add is soft skills, and there are hundreds of them. You're going to have soft skills in any environment anyway. So thank you very much for that. Now, if I go to, I'll take the two questions again. One is from Nkosinathi Ndlovu and the other one is from Anna Botha. The first question was, what would you say is the main difference between quants and actuaries in banking? I think we really touched on that earlier, unless there's anything to add. What incentive is there for banks to hire actuaries as they are more expensive and are not required under regulations? So there are those two questions. We have got 13 minutes remaining. So again, we can try and keep it brief. I'll start with Simon, you just finished. I'll start with you. We just keep it brief to answer those two questions from Nkosinathi Ndlovu and Anna Botha.
Yeah, no problem. Look, I don't think there's much difference, right? In terms of the work that you do, typically it's very similar. There is no work that's specifically reserved for actuaries within the banking environment. So it's what you as an actuary bring to the table. That's really important, and showing yourself to be more mature and more rounded compared to typical quant is what will stand you in good stead. Then in terms of the incentives to hire, look, I'm not convinced that that's the case, right? I mean, I think good quants are expensive, and particularly in South Africa, where we've got quite a high a shortage of competent kind of mathematical statistical graduates, actuarial graduates coming out of universities. I think you know, if we can find the right person, the salary is not going to be an impediment necessarily. I think the key there would be experience, and the one thing that I have noticed that my banking colleagues battle with is really the study support.
Okay.
You know, but in terms of just actuaries are not necessarily more expensive when we hire them, not at all.
Okay, no, thank you. Yeah, no, the actuaries are not expensive at all. Yeah, they are underpaid. Okay, thanks. Matthew and Neha, do you want to add anything to those two questions?
I think Simon covered everything on my side.
Yeah.
I don't know if you wants to add anything.
Yeah, I don't think you need to add to that one.
Yeah.
I think Simon can certainly obviously answer from the bank's perspective better than we can.
Okay, all right, thank you. So I'd like to move to, I've got 3 questions now remaining with 11 minutes for us to go. And we will ask one from the floor, just 1 or 2. So Anna Botha asked again, do you know the progress of implementing banking subjects in other parts of the world? And is there an agreement between us and the rest of the world to write the banking fellowship I can answer that one very easily. There are plans, definitely. So first, I did say there is an international banking subject offered by ASSA. Effectively, the ASSA fellowship subject is now being offered internationally. So that's the first point. Second point is there are a lot of initiatives happening in the UK now. Institute of Faculty of Actuaries are right now, as we speak, they've already announced to their community, they are developing a banking subject at the principles level and at the advanced level, and they are working with ASSA in that role. So it's actually a committee of banking actuaries in the UK and banking actuaries in South Africa. Then Australia is concentrating on something else like data science. Once they bed that down, that's on the cards. They want to introduce banking subject. So far, that's already happening in those three jurisdictions. We know that Canada has got strong interest. We know that the US has strong interest, but I'm not sure in terms of education where they are. We know that India has strong interest, and most people in India are also members of the Institute of Faculty of Actuaries, but they've got very strong interest in introducing a banking subject. So that work is happening. I am definitely always involved in that, so I know what's happening in some of these areas. So I won't bother you, Neha, Matthew, and Simon, that one, because I'm very much involved in it. Then the other question is from Masebe Mabota. What advice would you give someone still writing CT exams and looking to write banking exam in future? That is, should you focus more on mastering mainly statistics subject like CT4 or financial exams? Okay, I'm gonna let the panelists speak, but I'm an educator. Write everything properly and get 90%. Everything, don't select, just pass your exams, all of them. But anyway, Neha and Matthew, what are your comments on that question from Maseba Mabota? Do you have anything to add? Yeah.
I guess on my side, I haven't really seen how the banking paper is, but just from a pure experience point of view, CT4 and 6, I mean, the concept that you find there, you would find it especially for like IFRS 9 credit modeling space. So yeah, I guess it depends on where you're working, essentially. And CT8 would be a bit more complex, so maybe more in the market risk space. But just from a pure IFRS 9 credit risk modeling space, CT4 and 6 would be more relevant because you do come across a lot of the concepts such as Markov chain, PCAs, and concepts like this.
Okay, yeah. So Nea, because you wrote exams quite recently and finished your exams, you're still close to the action there. Thanks for that input. Simon and Matthew, do you have anything else to add on that question? You guys wrote exams maybe 10, 20 years ago. I don't even know CT4 and CT6 what it means, but yeah.
I mean, obviously, I think obviously you need to get all of those exams. So the order you do them in doesn't, I guess, make it the biggest difference. But my experience, I guess what I do recommend to people is that they finish all of their earlier exams before they write the fellowship exams. Because, I think the syllabus was kind of designed in a certain way, and there are building blocks that build on each other. So you should understand those basic fundamentals before you actually think about how to apply them in banking context or any context. So I would just recommend that doing them in that supplement order. I always recommend that to my own I guess team members.
Yeah, absolutely.
Okay, thank you very much, Matthew. Simon?
Yeah, I think finish your CTs before you move on. Don't be tempted by the salary increases associated with the bigger exams. I think the skill set that gets tested are very, very, very different. And I think it's almost like a prerequisite, right? If you don't write those papers, you will not pass your fellowship. But vice versa, even if you really do well in those papers, the CT papers, when you come to writing your fellowship, you need to actually expand your skill set quite a bit to be able to pass. But I agree with Nia in terms of the ones that are probably the most useful. having said that, if you're working with the payment models, you need to do accounting, and with IFRS 9, you need to do macroeconomic forecasts. So that now becomes useful as well. So I think they're all important.
Okay, yeah, actuarial exams are all important. As long as it's compulsory, you're going to have to take it and pass it. That's it, yeah. So yeah, thanks for answering. I think one last question. We have got 5 minutes. I don't think we have got a hand raised. So if we take that one last question, then we close. And it's a very simple, straightforward question. How do you find banking actuarial opportunities? How do you hunt for these? Panelists, how can you help Nkosinathi Ndlovu, who has asked that question?
So I think, I guess I can give a practical answer, is that I think between I think all the banks will have recruitment opportunities, like open opportunities on their websites, and the same for the consulting, audit firms. Personally with EY, we will have, on our recruitment pages, we do have all the open opportunities available. So that if they're there, you'll find them on the websites. So that's one thing to do, simply just to search for them online. And I'm sure all organizations do work with recruitment companies as well. So if you're in touch with recruitment companies who work with the banks, they will also, put your CV out there. But, so I think either of those two routes definitely can work.
Okay, no, thank you very much. Anything else to add from Simon and Nea? Nea, do you want to add something? They want to know, how do you look for these opportunities? They're asking, how do I look for a job?
I think ASSA also, if you're in South Africa, I think ASSA also does publish some vacancies. So that's a good place to start and see if there's any banking opportunities there. Otherwise, any kind of recruitment agencies, they would probably also have know who's hiring and who's not hiring.
I think
okay.
I agree with what my co-panelists said. Obviously, I think two things I just wanted to raise. One is there is no such thing as really banking and actuarial opportunities. That there aren't necessarily jobs reserved for actuaries within the banking space. So I think the thing one would need to do is to match the skill sets to the jobs that are out there that are being advertised. And if you've got the right skills and the right experience, then there's no reason why you shouldn't be eligible to come and work within a bank.
Okay, yeah, no, thanks for answering that question. I think, look, that's a job hunting question. You're going to have to put yourselves out there. I gave example last time in here right now when I spoke about present your skills. You can't just go and say, I'm an actuary, unless you're going to PwC or Deloitte that already employs actuaries in banking. If you're going to an HR manager in banking, present your skills. And then you can start saying, yeah, I'm also an actuary, but present the skills. You must understand what skills the actuaries possess. That's why we asked that question here, so that we could debate it. So I think it's a job hunting issue, but look for opportunities, present the skills. The professions they have to do their bit in terms of creating the demand, which we discussed here. So that's all. That's my addition. Otherwise, there's just one other last question that I think I can answer easily myself. Do we need to persuade the actuarial teaching bodies to include more banking-specific education? We've already touched on that. There's a lot of work happening in this space. There's a lot of work happening already in this space. So it's not even a case of convincing. Everyone is now convinced about what we need to do. It's now just a case of implementation with a lot of actuarial bodies at different stages and busy with it. It will take us 10, 20 years, trust me on that. But there's no convincing at all. For example, if we talk of South Africa, we have got our subject, which is your actuarial risk management, as it is known in the UK and in other areas, which introduces you in all the other, practice areas. That is already, it has already been looked at, and it's including more and more banking. And we also saying, even the earlier subjects, let's start thinking about it. So that's coming, that's happening. Otherwise, I did not see or hear of any hand that has been raised. I didn't see anything else. So I would like to thank our panelists, Nea and Matthew and Simon. Thank you very much for sharing your experiences. It's always good. We are going to have more sessions like this, and maybe we'll call you and we'll call other people. It's a continuous process. You see me, I will always be active in some of these things to make sure that we promote banking. And to all our attendees, our listeners here, thank you very much for coming. Please look out for more of these events. Go on the IAA website. I still chair the banking forum. Go there, look at stuff that's there. Email anyone from the banking committee in South Africa. The UK also now has an online interest group. Join those groups. If you're in Australia, Canada, United States of America, UK, anywhere else outside South Africa, you know, in Zimbabwe, in Kenya, in Ghana, here in Africa, we know that you've got your own local associations. Get involved, arrange these sessions, do seminars. Thank you very much. That's all we have to say. I do appreciate. Thank you to everyone.
Thank you very much.
Thank you.
Cheers. Thank you. Bye-bye, everyone. Bye-bye.